Something quite interesting is happening in the housing market right now, and for anybody who's been paying attention, you might have noticed the past few weeks in a row, the 30-year mortgage rates have been going down. And you might say to yourself, well, this is great news. That means that pretty soon it's going to go back to the 3% rates that we had, and everybody's going to be able to get these amazing rates, and it's going to be a good time to buy once again. Well, not so fast, guys. Let's go over in this video why this is happening and what it actually means. That way you can use this information to determine if you should actually be out there in the market right now. Right now, Freddie Mac reported that the average 30-year mortgage rate is 6.33%. And last week it was 6.49%. And a few weeks ago, it was a little over 7%. So for people who are in the market right now at this very moment to buy, this is good news for you. But here's a couple interesting things going on behind the scenes that we need to talk about. The first thing is, even though the rates are down almost 3/4 of a point for 30-year mortgages, this is having zero impact on the housing market in terms of the amount of closed sales, the amount of pending sales, and it's also not helping with homebuyer sentiment either, which you would think all of those things would be impacted positively, seeing such a sharp decrease in mortgage rates. What? What's the matter? What's the matter? Can't find your way home? So it might sound kind of strange that, wait a minute, we have mortgage rates dropping and still no one's jumping in to the fire right now to buy a home. Well, why is that, guys? Well, first of all, it's because it's still too expensive. I mean, that's really what it boils down to. Even though interest rates are down to 6.33% for the most well-qualified borrowers, it's still double, more than double than it was just a year ago. So that's the first thing. And there's no question that pretty much everywhere, the cost to buy a home in your market is still more expensive than it was a year ago as well. So buying right now is not looking so great, even with this slight drop in mortgage rates. And the situation is so dire right now that we've literally seen 9 straight months in a row this year. So almost the entirety of 2022, we have seen the amount of home sales go down month over month. So much so that this is the slowest pace of existing home sales that we've seen in the last 10 years. But why are these mortgage rates going down? Because the Fed is still raising interest rates, right? Well, yes, they are. So you would think mortgage rates should be going up. Well, the reason that they have been going down all comes down to supply and demand from investors. Investors who typically buy mortgage-backed securities besides the Fed, they no longer are interested in buying these mortgages for a couple of different reasons. One main reason is because the economy is on shaky ground right now, and to buy mortgage-backed securities right now is taking on a tremendous amount of risk at a time with a lot of uncertainty. So that's the first thing. And the second thing is that treasury yields now are so favorable that this is far more appealing to investors than buying mortgage-backed securities. And like I mentioned a minute ago, when it comes to supply and demand, when you have more supply of something than the demand for it, the price goes down. And that's exactly what's happening with these mortgage-backed securities, guys. No one wants them. That's basically what it comes down to. And if you think about it like this, if it wasn't for the Fed buying all these mortgage-backed securities, the mortgage market would completely collapse right now, to the point where the only place you might even be able to get a home loan would maybe be your local credit union or something like that. They're basically propping up the entire lending industry by continuing to buy mortgage-backed securities, even though they said they weren't going to. And to just understand real quick why this situation is so much more favorable now for investors to be buying these treasury bonds is because if you just go back to pre-pandemic days and you look at what the yields were for these treasury bonds, they were less than 1%. So who in their right mind is going to invest in something with that low of a return, especially even in good times, inflation was probably at least 2 or 3%. So it makes no sense. You're losing money, right? So now that you can get solid returns buying bonds and treasuries between 5 and 7%, this is looking way more appealing for investors, and they look at this as basically a risk-free investment, and they don't have to be saddled with these 30-year loans from the mortgage-backed securities either. These guys are so annoying, man. It's so annoying. There's no such thing as a quiet neighborhood anymore. I dare you to find somewhere where you're not being bombarded by leaf blowers. I can't even hear myself think. So this is a really important thing to understand as a home buyer or just a home seller. Anybody who has any involvement in the real estate market, you need to understand why these mortgage rates are going down. Because once you see the full picture and you understand the dynamics at play that are making the mortgage rates going down, it pretty much becomes clear that this is not turning things around. It's not a signal that the housing market is recovering. It's not a signal that there's no recession, guys. It's nothing like that. It's none of those things. All it is it's a signal that nobody wants to buy your mortgage right now. That's essentially what it comes down to. This is pretty gross. They got the dog grooming truck here spilling all their nasty water, so I'm gonna have to walk around it. People are so inconsiderate, man. But like I said a little bit earlier, this is a good sign for people who are in the market right now and are going to buy no matter what, because this is going to save you money. That's a guarantee. So it's not all bad news. It's good news for people who need to buy right now for one reason or another, whatever your reasons are. But this does not mean that we are in any sort of economic recovery right now. It just means no one wants to buy your mortgage debt because we are on the precipice of a huge recession, possibly depression, guys. So that's why it's getting cheaper. And by the way, I'm working on a full-on pros and cons video of what's going on with this economic collapse, right? Because I mentioned to you guys probably a little over a month ago in a video, and a lot of you said you wanted to see that video, but I've been carefully putting together what I think are pros and cons for this, and that video is coming probably next week. I just want to make sure I have enough points in there to cover in the video. And this is a great example, you know, a quick preview of what that will look like. Because the economy is in bad shape, the mortgage rates are down right now. So anyone who, like I said, who needs to buy or is in the position to buy, this is a good thing for you. So no matter how bad things get, there are going to be positives to this, and that's what that video is going to be all about. So stay tuned for that. And speaking of mortgages, there is concern right now that underwater mortgages could be coming back. And what do I mean by that? The Black Knight data firm just announced that they believe at this very moment there's about 450,000 US homeowners who are underwater on their mortgage. And in case you don't know what that means, it means you owe more on your house than what it's actually worth. So if you were to sell it today, you would be selling at a loss, and you would either need to come to the closing table with money and actually pay to sell your own home, or you would need to go through a short sale approved by your bank and come out with a loss on the end that your bank approved. So either way, it's not good for you. And Black Knight is saying that many of the people who are underwater right now bought within the last year, because you basically bought at the peak of the market, and now that things are starting to turn around in the housing market and many areas are starting to see declines in home prices, then a lot of these people are underwater. And it doesn't take much to go underwater on your property, guys. And the reason for that is because a lot of people don't put big significant down payments on their properties. What they do is, usually if you're buying a house, usually you'll put down maybe 5-10%. That's usually what most people can actually afford. A lot of times they don't even have more than that. Man, I'm getting bombarded today. Got the cats, the dogs. Jeez. Got leaf blowers, cats, dogs, kids. Now for people who bought before this whole run-up in the housing market are sitting pretty right now, and are in very good shape with their home equity and are at the lowest amount of risk when it comes to actually going underwater on their loan. So that is a good thing, but the people who bought over the past couple years are not so lucky. Black Knight is saying that more than half of the underwater borrowers bought a home in 2022, but if you bought in 2021, only about 1% of those people are underwater right now. So the numbers drastically change when you move from 2021 to 2022.
This is another one where they really need to get the hint. They started off asking almost $2.5 million for this house nearly 6 months ago, have dropped the price by $104,000 and still no takers.
But if we look at the 2022 numbers, that's where we see the most people who could be facing problems right now, when you got half people already potentially underwater on their mortgages, and literally 20% of the people who bought in 2022 or refinanced have less than 10% equity in their house right now. And to make matters worse, Black Knight estimates about 1 million homeowners have limited equity in their homes of 10% or less. So think about this for a minute. If home prices go down by 10%, which is a very, very mild estimate, even the experts now are saying a 20% decrease in prices is most likely coming next year, and in some markets it's probably going to be much worse than that. So all these people, these 1 million homeowners who have 10% or less equity, they're all going to be underwater on their mortgages, guys. Now, at first glance, this might not be such a bad thing for them in the sense that, well, as long as they can afford to keep paying their mortgage, they'll be fine. You know, they're not at any danger. The only problem comes from a couple different scenarios, which I've been warning you guys about. So the biggest problems that people face when they go underwater on their homes is, number one, what about your job? When we're going into a time in the economy when things are very uncertain and there's a lot of layoffs going on right now, if you lose your job, then there's a high probability you're not going to be able to make your mortgage payment. So those people are at risk. And if you're one of the lucky ones, let's say, and you don't lose your job, you're able to keep your job and your finances in order, but let's say you get a job offer or an opportunity or are forced to transfer out of state somewhere different, and now you need to sell your house. Well, even if you're lucky enough to keep your job, you still have a house that's underwater on its mortgage, so you can't sell it without taking a loss. So now you're in this predicament. Do I sell the house and take the loss? Do I try to turn it into a rental property? Can I even make any money on that? Did I even calculate this when I bought the house? There's a lot of things to consider when home prices come down. This 20% that even the experts are calling for, and these people go underwater on their mortgage. And by the way, they only need to lose 10% for them to be underwater, and this doesn't even account for how many people, if they lost 15 or 20% equity, would be underwater. So 1 million people underwater on their mortgage is probably a conservative estimate if home prices fall by 20%. So that's another thing to think about. And this is how we get waves of foreclosures, guys. I'm not saying for sure that's going to happen, but this is one way that it definitely could happen. Check this out. Got tons of Christmas decorations over there. Must look really pretty at nighttime. And this is just another reason why I keep telling everybody that opportunity is coming, okay? No matter how bad things get, there's going to be opportunity. And when you have that many homeowners start to go underwater on their homes all at once, you better believe there's going to be some fire sale opportunities out there, because you're going to have the people that get foreclosed on that just can't make the payment anymore. You're going to have people do short sales that need to get out of the property because they have a job transfer, they need to move, whatever, and they are going to be taking a loss on it. You have those people. And then you have people that just panic sell and want to get out before they lose way too much money, and you have people like that that are going to be selling. Top that off with all the people we talked about the other day, the sellers that have been taking their properties off the market now for the end of the year and plan on relisting again in the spring. Inventory's coming, guys. Next year could be one of the greatest inventory waves in the housing market that we've ever seen. Now, there's no guarantee of that. That's just a prediction based on the information that we're getting right now. Now, one of my subscribers, Dave, who lives in Germany, he wrote me an email talking about how much energy prices are going up over there, and that's something that we have been hearing a lot about because of the situation with Ukraine and the fuel prices basically skyrocketing in this area. So to put this into perspective, Dave gave me a whole detailed breakdown, and I'll give you guys some of the quick numbers so you can see just how much things are increasing over there. So for 2022, Dave's electric bill, he paid 956 euros. And apparently over there in Germany, they have the right to use whoever they want for different electric providers. But the catch is, usually you sign a 2-year contract with them at a pre-negotiated rate, okay? But what's happening now is not only are people getting charged more than they're supposed to be getting charged, that was not agreed upon in their contracts, but the new contracts that are coming up for renewal are significantly higher than they were for 2022. Dave's electric bill for 2023 is going to go from 956 euros for the year up to 2,173 euros for the year, which is obviously more than double, guys. And he's one of the lucky ones because he told me about his friend who actually did not negotiate his contract for the electric bill soon enough, and he's in big trouble. And basically it works the same way over there with natural gas as well. So he has to have both. He has gas appliances and as well as using the electricity for his home. And he's basically doing everything he can right now to cut back on using the gas because of how much that has gone up. And check this out, guys. His friend over there missed the boat when it comes to signing up for a good gas contract back in the middle of 2022. Dave was telling me that would have been the best time to sign a new gas contract for the next couple of years. Well, I guess his friend missed the boat on that, and he recently just signed up for one, and his natural gas bill is going to be 900 euros per month. Now, can you imagine paying basically a mortgage just to heat your home? I mean, that is insanity, guys, and that's what people in Europe are facing right now. I'm sure this is not exclusive to Germany, but he's in Germany, and this is how much it's going up by. So this is pretty bad. You can pretty much guarantee this is going to bankrupt a lot of households over there. I mean, when I see people facing this level of increases when it comes to their utility bills, it's just pretty much mind-blowing, guys. Like, people here in Florida are going to be complaining about their electric bill going up probably $50 a month, and over there, it's basically doubling. And that is just horrible. I could not imagine that being the situation right now. And so that's what I was saying before, no matter how bad things get, at least there's things to be grateful for, I'm going to be grateful if my electric bill only goes up by 50 bucks instead of by double, That'll be a positive. Of course, it still sucks, but it could be worse. Now, another thing with the insurance situation here in Florida is a lot of people are aware that the homeowners insurance here is becoming basically unaffordable. And there's a lot of reasons why that's happening. Some of it has to do with the amount of insurance companies that are leaving the state as well as going insolvent. There's also a lot of fraud, people making fraudulent insurance claims that shouldn't be paid. There's a lot of litigation that goes on as well. And we just have a lot of natural disasters here, usually when it comes to flooding and hurricanes, stuff like that. But the Florida legislature is going to be meeting soon to try and figure out how to cool down this insurance situation before it gets completely out of hand and nobody can afford it anymore. And one thing that they're looking at doing is they're going to be looking at squashing these high attorney fees when it comes to all the litigation surrounding insurance, which supposedly, if they do that, would make it more attractive for new insurance companies to come in, knowing that they're not going to have to pay exorbitant legal fees if they get sued. Because they're saying all you got to do is turn on the TV and every other ad is talking about how when your property's damaged, give us a call and we'll basically make you rich. And this is not how it should go, because you have attorneys and policyholders taking advantage of this situation that pretty much make it worse for everyone. But one of the other lawmakers is saying, no, if we do that, it's just going to make it harder for people who are not getting paid the right amount to actually get paid, because less attorneys are going to be willing to take these insurance companies to court if they're not going to be getting their exorbitant fees, essentially. The insurance situation is so bad right now that they don't have enough reinsurance, which is basically insurance for insurance companies. The Florida legislator is going to be looking at making possibly a $2 billion contribution to reinsurance for the state's insurance companies, just to make sure that more insurance companies don't go out of business into 2023, because that's how bad the situation is here. So the state is going to be starting to subsidize insurance companies here because the situation has gotten so far out of control. So I guess the good news is they're working on it, and we'll see if anything actually comes out of this, if it helps make anything better. But, you know, it's pretty bad when the state has to start using some of their own money, our tax dollars essentially, to help cool off this insurance situation, because it's going to get to the point where no one can afford these rates anymore, and when you need to have insurance for your property, it's required. You have no choice, guys. You have to get it, and a lot of times people are only left with the insurer of last resort here, which is Citizens Insurance. So we'll see what happens with that. It's going to be interesting, to say the least. Of course, as we have more updates on it, I'll always let you guys know. And I want to give you guys one last funny story to contemplate. So Florida is the #2 state in the United States where we have the most HOA complaints, and it's only second to California. And they're saying it's because of population. You know, these are some of the biggest states in terms of population, and we also have a ton of HOAs in these states, which is why we have the most complaints. And I just thought this was funny when I read this, because here are the top 3 things that HOAs write the most fees and fines for, and they have the most complaints for. So usually people are complaining about parking. So you see all the time these people parking on the lawn and stuff over here. There's no HOA here, but yeah, you would be ticketed for that right there. So parking on the lawn and lawn care. So yeah, probably this wouldn't be allowed, you know, having this bare little patch here and having yards that don't look so good. That wouldn't be allowed either. You're going to get a citation for that in an HOA in Florida and in California. And home repair. So we don't have anything too terrible to look at right here, but basically you need to keep up with the repairs on your homes too. Otherwise, you're going to be getting citations from your HOAs in these states. So you probably can't have a yard looking like this, where you know, the fence is all torn down, everything looks completely beat up, you know, garbage in the front yard. This would never fly in an HOA here, guys. So that's part of the reason people hate HOAs, because they want the freedom to have their yard look like a disaster like this. So some people like that, having the disaster look works for them. But this is where we're seeing the most complaints, you know, people that are complaining about the yard, they complain about the home maintenance, and they're complaining about people parking in the wrong places. So if you guys are looking at buying in an HOA in California or Florida, you better make sure your place doesn't look like this. Otherwise, you're going to be getting some citations next year. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I put out a new video. And if you don't want to wait, check out my next video on the screen right over here, and I'll see you in the next one.